You ought to worry about everything else. If you have any money in anything other than Bitcoin, you should be worrying that someone's going to get rational and start to short or sell that asset you're holding as a store of value. And they're going to start to buy Bitcoin with it, because when that happens, gold goes from $11 trillion market cap to $2 trillion market cap. Bitcoin goes from $500 billion market cap to $5 trillion market cap.
In this interview with billionaire investor, former MicroStrategy CEO and Bitcoin maximalist Michael Saylor, he demolishes the idea that it's too late to buy Bitcoin. He starts by discussing the alternatives to Bitcoin, and he provides empirical evidence as to why Bitcoin is the greatest asset class. He explains why all forms of conventional investments, including large digital monopolies like Google and Apple, are inferior to Bitcoin from an investment standpoint. From there, he pivots to the crux of the matter. Is it too late to buy Bitcoin? The answer is a resounding no, and he provides a case study in New York real estate. He asks an interesting question after setting the background as follows. New York was founded in 1776. Would you buy it in 1886, even though you'd be 100 years late to the party? He believes we're currently at the same place in Bitcoin's life cycle. Let's dive in and first consider Saylor's unique insight on why Bitcoin is the superior asset class.
So you're a normal person and you want to save money for retirement or to give to your kids. So you put it in a savings account, you get 5% interest. The monetary inflation rate is 7 or 8 or 9%. You got a negative real yield of 3%. If you end up with a negative real yield of 3.5%, then over 100 years, $1 million saved is worth $30,000. Okay, and so for the average person, saving money in bonds with a 3.5% or 4% interest rate when the currency expands at 7 or 8, that's a losing proposition. You lose 97% of your wealth over the course of 3 generations. So clearly, bonds and savings accounts don't work. So the next question is, do I just put all my excess money in the S&P index? Well, traditionally, the money supply in the US is expanding at 7% and the S&P index is going up at 7%. So if you save $1 million over the course of your life and you put it all in the S&P index, then in 100 years, it'll be worth $1 million. So that's wealth preservation, but you're not doing any better than that. And that just kind of assumes that that the S&P 500 is going to be relevant for 100 years and you can stick around the country.
So that's it? That's the best you can do?
The next issue is, well, so what I put in real estate? If you buy real estate, you're an average person. Can you buy a building? Probably not. Can you buy a warehouse? Not easy. Maybe if you're a rich family, you buy warehouses, right? So you have some money, you invest it in Apple stock or Amazon or Facebook or Google or a REIT that owns a building. The dilutive problem with securities is that there are risk factors. First of all, there's a management team. They're going to take 1% every year. They're not doing it for free. They're charging you to manage the company or the building, right? And if you're lucky, that's only 1%. That's only the first problem. It turns out that when you run a company, you also have the risk of labor.
So far, Michael Saylor has provided sound mathematical explanations as to why Bitcoin is the superior asset class compared to regular savings accounts and stocks. He even explains that even real estate, which was once considered the holy grail of investment, has been and will continue to be outperformed by Bitcoin. He touches on securities and explains that although securities can compete in terms of returns, to an extent they carry significant risks associated with the human elements required to manage and keep them functioning. He describes Bitcoin as the antithesis to securities in this regard, and all of that forms the background of his thesis as to why Bitcoin is primed for a significant explosion, even from its current price. Let's dive right back in.
You know, New York was the greatest city in North America by about 1776, and you would have been late to the party. But the question is, would you buy a city block in New York in 1776? How about 1976? If you were 200 years late to New York City, if you look at the property values of New York in 1976, what you'll find is you would be rich if you had actually bought real estate in New York in 1976. So the answer to the issue is, in every economic system, every economic empire, there's always one city, one place, one network where people gravitate to.
Saylor's message is clear. Even now, Bitcoin represents an unprecedented opportunity, especially for buyers with long-time horizons. Saylor also later explains why any fear around Bitcoin is irrational. He explains that Bitcoin has crossed the event horizon and is in its expansion adoption stage. He goes further to explain that the dominoes for mass expansion are already falling with the ETF approval. All things considered, Michael believes Bitcoin is the perfect investment and only has one piece of advice for investors: don't mess it up yourself. To see the latest in crypto news, watch this video here.